Hi traders, this is Daryl, and this is a 1, 2, 3 step-by-step or continuous trading, just like we were trading it live almost. Okay, this pair is the dollar yen. Now, previously on the Euro New Zealand, I was showing you that, and I used a 13 pip range bar. On this one, I only use a 5 because it typically doesn't move nearly as rapidly. Plus, the spread's a lot less. So, let's just walk through this starting from Friday, April 29th session, just after the New York news. Okay, and as I said, this is a 5 pip range bar instead of a 13. So each one of these bars represents 5 pips, and that's our start. So here's New York Open. This would be 8 a.m. New York time. And then at 8:30 there was U.S. news. So that is represented by all this stuff right in here. Prices just kind of going back and forth, not really picking a direction. So we're going to start shortly after the news right over here. Now, actually, the news I think ended right around. Let me see. Right around here was when the news happened. So price went down, went back up, blah blah blah. We don't want to trade before the news, just in case we get stuck in a trade and it doesn't go anyplace. Anyways, so now the news is over with. Right about here, it's been over with for about 15 minutes, and we're still above the 50 moving average. This is the once again the 7 smooth moving average, and so I'm going to decide to look at this as taking this as the first trade possibly. So I'm going to mark this one right here as our first number 1 to start with. Okay, so this is number 1. So now we're looking for a number 2, and we have a number 2 right up here. Okay, so now we have our 1, 2, and then price quite nicely gives us a 3 right down here. All right, now we have our 1, 2, 3, and we're looking to trade a break of the 2 right at this level plus 1 pip or so. So since this is only a 5 pip range bar, and this is the Euro Yen, you're probably not going to have as an aggressive take profit. So I might have a take profit on this of say 10 pips with an equivalent stop of say 10 pips. And the spread is generally less than 2 on this one for most brokers. So that's what we're working with. All right, so anyways, price does go up, crosses our 2, so we're in the trade right around here someplace. And we're looking for 10 pips. So from, let's see, from here, this is 25, this is 26. Actually, this is not, 26 is right here. On the dollar yen, we're probably only using a 1 pip breach of the 2, and so that's right about here for an entry. So we're entering then on this bar, and price goes up immediately about 4 pips. So less the spread, we're up about 3, and then it comes back down here 3. So now we're still in the trade because price is just kind of going back and forth. So let's see what happens. Next bar, we go down. Okay, so let me do this. I'm going to put in a 10 pip bar to give us our extremes for the trade parameters. Where our stop loss, where our take profit might be. So this is now a 10 pip bar. So if we go 10 pips up from our entry right here, this is the level we want to take profit, right up here. Make this a different color so it doesn't blend in so much. Okay. And we'll just go ahead and make it full thickness there. Okay, so there is 10. We're looking for 10 pips, but we're only getting in right about here. So actually, with the spread, let's make this 12 pips, right? Because we need to include the spread to get to our profit. So I'll just change this to 8, and that would be our 10 pips there. And then on the downside, then we're looking at only actually 8 pips from here to stop out. So let's change this, and we'll make this one also just 8 pips. And let's make it red so we know which one is which. Very good. Okay, so there's our trade parameters for this one. Okay, so let's see what happens. All right, moving along. Next bar, we're now up, and we're up about we're up from here roughly about a little over 4 pips. Okay, so now we're up 5. Now some people at this point, see, this is up almost 7. Some people at +5 are going to want to maybe move their stop to break even. I don't know if I would at +5. I might at +6. But that's totally your discretion, what you want to do. So the next candle, now we're back down. We're still within the range of this high, and this low is where our stop would be. So we're okay right now. And what does the chart look like? It's starting to look pretty busy. Okay, so we came down, we went up, now we're back down and up, and it's kind of going sideways, but you see we have higher lows. This low is higher than this low. Same thing here. This low, each low is higher. This one's a tad lower than this one, but our highs are getting higher too. So here's our last high. Now we have a new high right here, a higher high here, a higher high here, and we're still making a higher high here. Now we do have this barrier up here, so the closer we get to this level, the more we're definitely going to want to protect our risk in this and go to break even. Okay, so now I'm going to watch this next bar very closely, because if it looks like it's getting into just a range, just back and forth and not really going anywhere, I might just exit anyways. And here we do go down nowhere near our stop loss, but now we have another green bar. I'm not liking this a whole lot at this point, and at this point we're probably down about 2 pips. But let's just wait and see what happens. This is earlier in the New York session, so we still know we have a lot of price action to go. And we get a higher close and a higher close, and now we're up near this whole area. Let's see, our high here is what, 35. The high on this candle was 33, and this one's about 32 and 32 even. Okay. So do we want to consider our options here? Let's, I'd probably wait it out and see if I can get something out of here. Right now we're up about 2 or 3 pips. Next bar looks like it may take us into profit. Okay, we're at least at break even here. Our profit target is about 29. No, sorry, is right up here. This is about 38, 39. I think, let me see, this is high 25, 37. Okay, so 37, my bar here, I didn't draw that well. 37 is actually, this is really close to our profit level right here, within probably a half a pip. So at least my stop is going to be now, it's going to be up, let's just move this bar, it's going to be up here to about +1, okay, and you know, since it's already past this high, you know, you may just want to take it off. You got up here, you got 8, 9 pips, whatever, but let's just see what happens here, okay, and it does go up and hit your profit target. Okay, so that's good. So now we're looking for, oh, by the way, there was other 1, 2, 3s in here. Let's point these out real quick and then we'll get off to the next trade. Okay, this is the 1, 2, 3 we counted. So now here's, this 3 actually can become a new 1. And then this would be a 2. And then this would be a 3. But then this 3 gets wiped out, so not really. Once you get in a trade using a 1, 2, 3, you might want to just ignore any future ones going in your direction, or you might want to use them as the places to add to your winning trade. That's a really advanced method. I wouldn't suggest doing that anytime soon, unless you've already been trading for years and years and got an idea about what you're doing and know about momentum and other support resistance levels, etc., etc. Okay, so let's see what happens next here. So now we've taken profits. Now we're looking to enter our next long trade. Okay, next candle hits, it goes a little bit higher and then comes down. And that's still come down. And we have another green candle. And now we have a new number 1. Okay, new number 1 right here. And let's see what happens next here. Okay, price is going up. We have a new number 2. Okay, our new number 2 is right up here. Of course, why is this a 1? Because it's a lower, it's a low that is lower than the candle before it and lower than the candle after it. So that's what makes this a 1. This is a 2 because it's higher than the candle before it and also higher than the candle after it. So just remember those things. You get a candle before it and after it, that makes it stand out. That gives you your new numbers as far as how to number your 1, 2, 3s. Okay, so next we have nothing that is showing there. Now this looks a little bit iffy, since the low of this candle is actually lower than our number 1, and so this actually negates this 1, 2, 3. I would say, if I was trading this, I would say, well, this is a lower low than my 1, so I'm no longer interested in looking at this as a 1, 2, 3. Okay, it's probably best you get a lower one than your 1 and you're going in up. You want to just forget it and wait for something better setup. Okay, so next candle doesn't really do anything. Next one, so now we're in a range. Price is just hanging out right here. We do have another move up. So actually, at this point, I'm sorry, I kind of was looking at this range stuff. We could call this a number 1 down here, and then we could call this a number 2 right here. Now, do we want to do this? I am still reluctant to look at this as a viable setup. As I mentioned before, this is a lower low than this one over here was, the previous one we had marked as number 1. So that's generally, and we have also a lower high. So that's generally indicating we may be looking at a change in direction or some sort of retracement, and also look at this whole area from about here over to here. This is just a botched up zone of just too much price action in here. So really, this has kind of created a level above here that's kind of like a breakout area, and a level below here that's kind of like a breakout area. Okay, so now we have a 1, 2, 3, as I said, but I'm not interested in this. It's just too busy. It's too consolidated in here. And remember, these are also only 5 pip candles, so that makes that range seem even smaller. Okay, so let's go on and see what does happen. So, okay, so price is kind of going up near our highs. Now it's stopping there. So now we have 3 tries to, this is our third attempt at this high. This made the new high. This one didn't quite make it there. This one makes it about the same as this one. This is kind of looking like it could be a level. Of course, my cheater thing here tells me it was a level. This was the high of the U.S. session, but just ignore that for now. And so now we have a pin bar over here on the right, which it comes down to the bottom of, almost to the bottom of this level, which I had marked out with this is about the low. And it finds support there. It finds buyers that take it from this low back up to the high of this candle. Okay, next we have just a bar in the middle. It's not showing me anything. Now also we're now getting lower highs, and we've gone from we're getting higher lows. So this is now moving into what's called a triangle, and a triangle is simply you draw a line from here to here, and price is getting lower. You draw a line from here to here, price is getting higher. So that means the bulls and the bears are none of them are willing to take the lead on this. So price just consolidates and gets into a tighter range. Also, the 50 is moving up and getting closer to price action than it was here and here. It keeps getting closer. Okay. Now we have a close actually below the 50 here. So now we're looking for a potential change in direction. So with a close below the 50, I am now looking for a short trade to enter. No potential there because it closes even lower. And next one closes even lower, and lower. So there's no opportunity to get in, but definitely there's at least a strong pullback here, or possibly just a change in direction. And lower, lower, lower. We have our first green bar. And right here we have a new potential low, but I don't see any entries here, and I'll be right back. Okay, here we are still in the dollar yen, and price has gone down 36 pips before any type of pullback at all. No chance to get in here because we don't have any higher highs or higher lows or any of that stuff to make a new 1, 2, 3. Now here we have a low after 36 pip drop. Now with a straight drop this size on this pair, I'm not inclined to, I guess it just depends. But it's always dependent. But basically, I'm not going to enter if we get a new 1, 2, 3 here. So but let's just look at this anyways. And the reason for that is I can get into in depth if you want. Basically, what happens in this case is something. Some larger institutions, hedge funds, central banks, whatever, decided that they are going to sell this thing off to make some money. So now they sell it off. There's no place for anybody to get in here. Now this creates a low after a sharp pull down. Let me see, this actually takes only 54 starting up here. 54. This takes, well, it takes 15, 20 minutes to complete this. 51, 35. It takes 15 minutes to get down here. So that's not super fast, but it's pretty fast for this pair. So here's what the bigger institutions do is they make a big move down and they start throwing money at this, more money and more money. The big chunk comes in here, moves it down to here. Then there's a little bit of a pullback. Then they throw another big chunk at it, moves down a few more pips, more of a pullback. And so now they throw another chunk at it, and then this is a pretty big chunk, and they've taken out here, they've taken out the stops that were maybe over in this level right here. Okay, in fact, let me make this a wee bit smaller. I'm going to have to do it this way here so we can see other levels as they come in here. Okay, so here's where, here's the one that I put in right over here. Now you see they took out the stops at this level, and as you can see this is a pretty significant level across here. Price did break it over here way back in Asia, went down a few pips, but it couldn't stand the move underneath there. So this whole time over to here, approximately here, it trades above there. Now it trades below this level, and it comes down and then it comes back up, but it can't sustain a move up. It comes way down. Let me just move this line over so we can keep this level in mind. Now price trades way down below here, comes up, attempts this level again, gets knocked down, and then trades below here, kind of in a range, makes another attempt up here, can't break through, and then finally does break through here, but sellers come in, take it back down, but then it does continue up here. It tries to get back down here again, and it can't because there's buyers waiting there. So this has established itself as a level. So once the bank so there's a lot of people with stops right here because they see this level. They may have traded when it got above this level, and they're going to put their stop in here. Without going too much into depth here, that's kind of what might happen. So now price did trade all the way up here to this range, which is, let's see, this is kind of a level up here too. You see, here we have this level. Let me just mark that up. We have this, oh crap. Okay. We have this level right here, and price couldn't trade above this level. It tried here, and it tried again over here. Just couldn't make it. So eventually, price did come back down because this was not the level that the money was waiting at to buy. I'm talking about this level up here. They wanted to sell here. So there was enough sellers up here. They overtook the buyers and yada yada. All right, so moving along, what happens here? We have a 1 down here in the bottom right. Now we have what happens after that. Oh, we do get on the next one, we do have a lower low. See, remember, I mentioned this in another video, which you may or may not have seen yet, but I don't take 1, 2, 3s, like counting this as a 1 up here, and then since this is a low that has a higher low and a higher low on either side, I'm not going to count that as a 2, because I just don't want to get whipsawed here as this type of price action. Plus we do have this level down in here, which isn't as significant as those other two, but it's still sort of a level. Okay, So now I'm just going to count this as the first one. Okay, so moving along, let me just go ahead and enlarge this so you can see this stuff easier. Okay, okay, there we go. Okay, so there's our 1 right here. Now we have a new potential 2 right here. Let's see if we can get this 3 going on. Okay, now we have a 3 right here. Okay, and then we do get a break of the 2. So let's see how long we've been in this range. This time is 10:51. This break here happens only a few minutes later. Yeah, so I'd definitely be interested in getting in on this price action here that trades below the 2. This low is 99. Okay, so we have a round number here. Round number meaning 00. So a lot of people look at 00 and they see this as a kind of support level. You can see it was over here too. So I would probably, I don't know, I'd have to look at the price action. It seems to be moving pretty swiftly. I'd probably take a chance here and enter this trade on a break of the 2. Low is 99. That's actually below 100. And this low here hit 97. So I'm looking for only 1 pip below here to get in. So now I'm in. So let's see what happens. Okay, price trades back down to about my entry and starts taking off to the downside. Remember, I'm only looking for 10 pips, which would be 12 pips from my entry, and that 12 pips from my entry is right about, let's see if I can get down low enough on here. It's right about there. And my stop, let's change this color too, so it's easier to distinguish. Okay. And so then my stop from this entry is going to be right at this level up here. That includes the spread. Both of these include the spread. Let's see what happens here. So now I'm trading down on the next candle. Let me get rid of this indicator so we can see. Spread max delete. Okay. And my entry was, let's see, 98. My entry was 98. It's trading down here to this low of 87. So it's actually, with the spread, this is almost into profit right now. 87. How's my math? Oh, actually, okay, I got in here. It puts me in here. Yeah, so anyways, never mind. And then it goes down to almost this level. This low was what, 87. So it went down within 1 pip of my take profit. I've already moved my stop loss to break even plus a couple, and I would have got stopped out here, so this would have been a break even trade for me. Okay, so no loss, just a break even. And I still like it going short. Now I'm just watching for new 1, 2, 3s. So let's see what the chart gives us. Actually, we can count this as, let's see, 1, 2, 3. We could have used this also as a 1, 2, 3. 2, 3. We were already in this other one, so are you going to do that or not? I don't know. But at any rate, had we used this one as a 1, 2, 3 also, pretty much the same deal. It goes down enough to go to break even. But in this case, this would have stopped you out at break even using that as a 1, 2, 3. So Let's continue to move along. We're getting closer to the end of the London session, which is where we want to stop. Now we're coming up higher and even higher. Now, at this point, this is looking more like a real retrace. Let me show you what I mean here. Okay, our high was right here. We're coming down to this level right here. Our pullback is all the way to the higher, well, almost to the 38 Fibonacci level. Okay, and what that means what we could be doing is just making a typical type of retrace in a strong down move where and it's profit taking. There could be another level down here, buyers coming in for that reason, and it goes up about 16, it goes up about 17 pips from the low, which is a little over a third, about a third of a retrace, which is pretty normal retrace if it's a real strong move in one direction before it continues in that direction. Now, another thing, since this is Friday, getting later on Friday, then that could also be factoring into it, and most of the major moves could be done. But let's just pretend this is a normal day and we'll see what happens. So now we have a new 1 right here. Let me get rid of this Fibonacci so we're not too crowded there. So this could be a new 1. So let's see what happens. Okay, this could give us a new 2. And now what? We have a new 3. So here we have a decision to make. Is price continuing down? And it could be. And how far down is down? So right now we are 7 pips from this low. So it could be that it's just going to go down in here and crash. And it could be that price is responding to this entire level, or zone, I should say, from in here to in here. I'm looking over here too. This is kind of a zone. And maybe the zone should be more like about this. So maybe this is just a consolidation area. Or it just could be a zone where it breaks one way or the other. We're going to go for a bit. Right now it's below this zone as far as we can see. Let's see here how this works out. Yeah, the zone actually does go a little bit lower. In fact, it goes right down to the low of this bar right here. So, it depends on your risk. I'm not sure. I may have put this on or not. Probably I would not have, but let's just see what happens here. And the next one is 12. Okay, so now we're in, let's see this range here. Okay, so we're in right about here. That's our entry. And our stop is right about up here. Okay. And if you're in right here, then let's see, this low is 90. This low is 96. So we're only up about 4, so we haven't moved our stop anywhere yet. Our stop is still at 10 pips. Next one, okay, so now our stop can be moved to break even because now we're, let me see, we're up low, 96, low, 86. So we're up about 8 pips here, and since we just did break this bottom, it's late on a Friday, even if I was in this, I'd probably be getting out here with 8 pips, but let's just see what happens. And it does go down and hits our target and keeps going. So this was then what I would call a more typical type of Fibonacci move also. I know I'm mixing up a few things here, but this is also a good lesson, according at least to my observations, where price came down and made this low. Nice. Price came down and made this low, retraced about 1/3 of the way, which is pretty typical for a strong move, and then continues on down here. So either way, you would have not lost anything in this trade. You maybe made a few pips, or you made your 10 pips, or whatever. But this is how you would trade through an entire session. Once again, this was the dollar yen, so I'm using only 5 pip range bars on this. And because of the way it moves a little bit slower. 5 pip range bars. And that pretty much wraps it up for this video, because this is getting a little bit lengthy as well. And I'm hoping this is going to maybe enlighten a few people, and maybe you'll see what's going on and start to notice patterns, and a little bit about consolidation, a little bit about Fibonacci, a little bit about zones and levels, and each level. I know I just called this like a level up here. Well, a level doesn't mean 1 pip above is long, 1 pip below is short. A level is always really a range. But then when you can find a bigger range, I mean, that's also a range. But think of a level, instead of being a line in the sand, and more like being, a line in stone being more like a line in the sand, and a zone being a range in the sand. Okay. Sometimes what you can see is price, like in here. Okay, it's at the top of this range. It goes down, hits the bottom, goes back up to the top, comes down, not all the way to the bottom, but then goes back up to the top, comes back down to the bottom. If you get really good at trading stuff like this, you can make a lot of pips. But that's pretty tricky, and I haven't quite mastered that yet. Anyways, I hope this helps somebody, and good hunting.